Hello, everybody. Welcome. Let's get started. Tesla stock is down 3% today. It's about to break through $380, I think. $1.2 trillion market cap, 200 PE ratio, and I think the stock is worth about $100. Nvidia is up 4%. Overall markets are about flat. Nvidia and Broadcom are up. Tesla, Amazon, Apple, Google is down quite a bit. Google is down about 78% today, one of the most actively traded stocks of the day. AMD is also down about 78%. We have lots of earnings calls we can go through. It depends on what people want to talk about. Yields are down 9 basis points. Crude oil is down 2% to $71 per barrel. And ISM services came in a little lower than expected today. And ADP employment change for January was higher than expected. So the employment market seems to be doing okay for now. Let's read one of these articles to kind of get the day started. Any questions, comments? Please request to speak. This space will be followed by a 1 hour of subscribers on the space. We're going to stop at 1 hour, and then we're going to continue with the subscribers on the space where we dig into companies a little bit more. S&P 500 and NASDAQ slipped on Wednesday, with Alphabet the biggest drag after tech giants dour cloud revenue and hefty investments into AI disappointed investors, while a slew of earnings added to the volatility. Google parent Alphabet dropped 8% after posting downbeat cloud revenue growth and earmarking a higher than expected $75 billion for its AI build-out this year. The market has some evidence to suggest that there are other companies that possibly doing it cheaper, better, faster, quicker, said Dave Graschek, managing director in planning strategy and research at Esperiant. So what is the wisdom of continuing to maintain high capex? That's exactly what I said yesterday. I think there is a kind of misunderstanding here in the markets these days that kind of says the more capex we announce, the higher our stock goes, and the more we can play into the AI hype. But the thing is, like, time and time again with Microsoft and with Google, we're seeing the market it's kind of starting to ask for, the market is starting to ask for returns, bottom line profitability, effectiveness of these capex dollars being spent. Hundreds of billions of dollars of capex was spent in the last couple of years on NVIDIA GPUs. And the market says, where is the steak? This is too much sizzle. We want more steak. And Google and Microsoft so far had been unable to deliver the steak, just a lot of sizzle. So now, in this Reuters article, quote from a managing director in planning strategy and research, quote, what is the wisdom of continuing to maintain high capex? So these are the stock vigilantes. The bond vigilantes are nowhere to be seen. We're now seeing stock vigilantes asking these megatech companies, hyperscalers, to scale back on their capex spending. AI-related stocks were rocked last week following the soaring popularity of a low-cost Chinese AI model developed by startups DeepSeek. NVIDIA, one of the companies that was the worst hit, was up 3.8% on the day. Advanced Micro Devices, meanwhile, lost 9% after CEO Lisa Su said the company's current quarter data center sales, a proxy for its AI revenue, would fall about 7% from the previous quarter. On the data front, U.S. services sector activity unexpectedly slowed in January amid cooling demand, helping curb price growth. A reading from the Institute of Supply Management showed private payrolls rose 183,000 jobs last month, compared with an estimated 150,000 per economists polled by Reuters. The all-important January non-farm payroll report is expected to be released on Friday. Shares of Apple eased 1% as Bloomberg News reported that China's antitrust regulator was preparing for a possible investigation of the iPhone maker. I think something similar is possible for Tesla as well. I mean, Tesla is obviously in the protected group of companies now with Trump in administration and Elon and PayPal mafia across the White House. But this obviously doesn't apply to other regions of the world like Europe and China. Dow Jones rose, etc. 8 of the 11 S&P 500 sectors traded higher, though communication services over 3% fall obscured gains. Uber dropped 7% after the ride-hailing company forecast current quarter bookings below estimates. In the subscribers-only space, we're going to dig into Uber after this space. 1 hour limit on the space from now on. And now we're going to hop into subscribers-only space where I'm going to dig into Uber press release and other commentary from the company. And we might even listen to the earnings call in that space. Subscriber on the space that recorded available for subscribers. Pardeep, go ahead.
Yeah. I'm here. I'm here. So,
Okay, I couldn't hear Pardeep, but let's continue. Markets also looked for developments on the tariffs front after US President Donald Trump said on Tuesday he was in no hurry to speak to Chinese President Xi Jinping to try to defuse a new trade war between the countries. Richmond Fed President Thomas Barkin said the Fed was still leaning toward more rate cuts this year. Okay. Give me 1 second. How is the audio on X and YouTube? I need people to tell me how the audio is on YouTube and X. Yeah, we're gonna prioritize this from now on. I'm not gonna start until I get confirmation from now on. Okay, YouTube is good. How is X? Okay. Thank you, Justin. All right, let's continue. Richmond Fed president said Fed was still leaning towards more rate cuts this year, but flagged uncertainty around impact new tariffs, immigration regulation, and other Trump administration initiatives. FMC Corp plunged 34% as the agrochemicals producer forecast first quarter revenue below estimates. That is massive. I mean, FMC is a huge company. That's a massive move for a huge company. FMC Corp, American chemical manufacturing company headquartered in Philadelphia, which originated as an insecticide producer in 1883, later diversified into other industries. That's a massive drop. It's trading at 3 times PE, $4.5 billion company. Wow. It's down 80% from the end of 2022. What is going on here? That's crazy. Let's read an article on FMC. FMC Corporation reported a loss of 13 cents for the fourth quarter of 2024. This is in contrast with earnings of $8.77 reported in the year ago quarter. Barring one-time items, adjusted earnings per share were $1.79, beating the Zacks consensus estimate. Revenues up around 7% from the year ago quarter level. There's some regional information, trying to see. Full year revenue was down 5% from the previous year. Revenues for the first quarter are projected to be $750 to $800 million range, a 16% decrease at the midpoint from the same period in 2024. Volume is likely to fall as customers in various countries continue to cut inventories, and retailers and growers make cautious purchases in an environment of low commodity prices. Interesting. I'm going to look into this some more. That is why that's a wild drop for this company. Adjusted earnings beat estimates where revenues fell short. Volume growth was positive. Price declines in some regions impacted revenue performance. Okay. Yeah, these are some really large drops across the board between Google, AMD, Uber, Snap, FMC, just massive drops across the board that I think kind of indicates. I mean, Amazon down 2% today, Chipotle down a couple of percent as well, although that recovered a little bit from the morning's drop. And these are happening despite companies beating top line, bottom line estimates. So there's general weakness in the stock market, I think. And this is in line with my expectations in the last few months. I've been kind of pointing out that I think the economy is slowing down faster than people realize. And I think the commentary that we're hearing from companies on these calls is not as optimistic as market was expecting. So it's getting priced into stocks now. Um, I read AMD's earnings release, yes, last night, and listened to earnings call, at least the first half of it. I'm going to listen to it again. But my general understanding of AMD is, they're ramping their MI300X. They also have further hardware coming online soon. And MI325X, MI350 series, MI400 series coming this year and next. And my understanding is that these are very competitive products with the Hopper series. But Blackwell, NVIDIA's Blackwell, although it has lower memory capacity, it's a bit more tuned for AI applications than AMD's products. And the question is, how much of a moat is CUDA really? DeepSeek, I think, showed that given enough incentive, which obviously these companies have tens of billions of dollars of incentive to work around CUDA. So my short position in NVIDIA continues, and I don't think CUDA is going to be as much of a moat as NVIDIA bulls continue to believe. NVIDIA's CUDA ecosystem remains far ahead in AI, ML, and enterprise adoption, meaning Blackwell will likely be preferred choice for AI labs and hyperscalers. We'll see. Blackwell likely outperforms MI325X in real-world AI and ML applications due to its higher bandwidth, better interconnects, and software dominance. However, MI325X could be an attractive alternative for workloads needing extreme memory capacity, so these would be larger AI models. If AMD significantly improves ROCm support, it could become a more viable competitor, but CUDA remains a massive advantage for NVIDIA. We'll see. We'll see. My bet is that neither Google nor Microsoft nor Meta will spend as much money as they announced for 2025 on CapEx. And part two of my NVIDIA short thesis is that the portion of these hyperscalers CapEx going to NVIDIA will decline in the coming quarters and years. And on top of that, part three is that Nvidia's margins will decline faster than the market expects today. So, any questions, comments? Please request to speak. Toyota announced results today. Toyota is a $300 billion automaker. It produces about 5 times the number of vehicles as Tesla and makes 10 times bottom line profit. And that's with Tesla not paying its CEO. So if you also consider Elon's a normalized pay for Elon, then Tesla doesn't make any money. Even considering the fact that Tesla makes most of its profits selling ZEV credits and benefiting from the $7,500 EV tax credit in the US and elsewhere. Even after all that, the company is just not bottom line profitable. So half of Toyota's sales, which are about 10 million per year, half of them are electrified vehicles. Most of electrified vehicles are traditional hybrid vehicles. I don't think Toyota is planning huge increases in plug-in hybrid or BEV vehicles. I think the industry has generally decided that customers want hybrid over plug-in vehicles. But on the other hand, Toyota is also building now an EV factory in Shanghai for its Lexus brand, with a capacity of about 100,000 produced and with 1,000 workers. So I guess it's working on its own version of an unboxed assembly method. So Toyota is continuing. I mean, the competition is brewing between Toyota and BYD in that price segment. Tesla is kind of stuck in this 2 million per year vehicle range for now. I mean, I guess it's the kind of one outstanding question is how much demand growth this new Model Y is going to generate. But my guess is that it's going to be similar to the Highland Model 3. So not much of an increase, slightly higher prices to start with, and then followed by incentives, growing incentives to kind of move metal. Japan's Toyota raised its full-year operating forecast by 9% on Wednesday in a sign of confidence in its ability to ride out the impact of any additional U.S. tariffs. The world's top-selling automaker, raised its profit forecast for the current year through March 2025 to $31 billion versus 10% lower expected. That's a massive increase. The revision reflected efforts to strengthen its earnings power through keeping a lid on incentives, raising prices, and stabilizing production. Toyota said in the presentation materials. It also expects to gain from a weak yen. Toyota made the revision even though it posted weaker than expected earnings for the third quarter, for which it booked a second successive quarterly profit decline. Operating profit for 3 months through December totaled 1.2 trillion yen, down 28% from a year earlier, and compared with 1.4 trillion yen average of 9 months estimates in the poll. Okay, let me see if there's anything else. By region, operating income North America, which includes its top market by vehicle sales, the US, fell by 63% over the first 9 months of the financial year, mainly due to a decrease in sales volume and higher personnel-related costs. So these higher personnel-related costs, obviously, these are the UAW negotiated wages reverberating across the industry. So when Ford and GM increase wages for their workers, even the non-unionized workers demand more, and you see some increase from in other companies as well, which obviously includes Tesla. So Tesla will also see higher personnel-related costs in the coming years. Operating income in China also declined during that period, pressured by higher marketing costs as the automaker sought to retain market share amid heavy competition from Chinese brands. Toyota said it would establish a wholly owned company in Shanghai to develop and produce EVs and batteries for Lexus, with production set to start in 2027 and have an initial capacity of around 100,000 units per year. Last year, Toyota Group unit sales of 10.8 million vehicles for 2024, making the world's best-selling automaker for a fifth successive year. Yeah. Yeah, I was way off when I predicted that Toyota wouldn't be around by the end of 2025. That was a massive mistake I made. And two reasons why I missed is because one, I thought FSD would be robotaxiable by now. We were supposed to have millions of robotaxis by now. And then two, um, I didn't foresee consumers preferring hybrids over BEVs by this point. I mean, that's still kind of, I mean, hybrids are growing faster, let alone more sales, but they're also growing faster, which is crazy. Okay. Any questions, comments? Please request to speak. Otherwise, let's review some more news for Tesla. The Cybertruck now qualifies for the $7,500 tax credit, but I don't expect that to be any material event for Cybertruck sales, simply because most Cybertruck buyers make more than the income limitation for the $7,500 credit. I mean, even most Model Y buyers may make more than that limit. So Cybertruck even more so because Cybertruck is priced twice as much. Tesla China is offering insurance subsidies of 8,000 yuan or 1,100 US dollars for all Model 3 buyers, which, of course, is because of the intense competition in China. I don't think Tesla China makes any profits whatsoever. I think actually they might be generating loss in some of these base trim vehicles. Elon Musk is set to meet Indian Prime Minister during his visit to the US in about a week. Okay. Tesla's brand new Megapack factory in Shanghai will officially start mass production on February 11th. Sawyer says this factory will generate an estimated $8 to $10 billion in annual revenue, but that's not correct. The Megapack pricing in China will be significantly lower than in the US because of competition. Megapacks are even harder to differentiate than vehicles, especially in China with so many local players over there. I mean, Tesla buys the cells from competition. So, I don't think that's going to generate any sort of profits or anything in China. Nissan rejecting Honda's merger terms. Okay. Delaware's governor is weighing changes to the way business disputes are handled in the state. Okay. Mercedes gains Tesla Supercharger access in the US, Canada coming later this year. I don't see any other material news here. We're supposed to be getting some news from Figure AI at some point today, but I don't know what. It might just be hype. BYD's new Denza Z9 GT EV can parallel park in place by turning and spinning its right rear wheel forward and left rear wheel backward. Yeah, I mean, I think these kind of the days of Chinese companies just copying and not innovating is over. Um, they seem to be doing just fine. Figure CEO says Figure made a major breakthrough on fully end-to-end robot AI built entirely in-house. We're excited to show you in the next 30 days something no one has ever seen on a humanoid. Okay. So you can now buy a Cybertruck for $70,000 after the tax credit and other discounts, referral discounts, military discounts, etc. And I think there's going to be more. Um, and it looks like Cybertruck is just taking share from Model S and X, frankly. So curious to see what Tesla will do with Cybertruck because according to Troy, it costs $100,000 to produce one, and I would expect that number to kind of come down a little bit, but 70,000 versus 100,000 is a massive difference. So um, I don't know how much of a future Cybertruck has at this point. It's kind of crazy. I mean, I thought that it would be, a great product, but it hasn't taken the sales haven't taken off. All right. Anything else? Let's see. Germany announced that Tesla sales in the country have dropped very substantially. Gordon Johnson has the full kind of country by country, month by month analysis. But you can see at the top here, I just pinned it. Tesla sales by Germany, this is for employee. The peak and the decline is really incredible. It's really eye opening. Tesla new registrations in Germany fell 60% in January, year over year. And as you know, Europe, China, and California make up most of the EV sales. So I don't know what the game plan here is for Tesla stock, to be honest with you. I don't quite understand where the bullishness is coming from. But right now, the stock is down about 3%. Um, the Tesla auto business, I think, is worth about 100 to $200 billion. Tesla Energy, maybe about the same. So that gives us about $300 billion of total between Tesla Automotive and Tesla Energy. And the stock is worth right now $1.2 trillion. I don't think FSD is going to be unsupervised this year and possibly not even next year. I think hardware 5 is going to be needed for that. And I think any sort of robotaxi scaling is going to take many years. And what's going to happen once everything scales, like Tesla robotaxis, Waymo, other players, the competitive landscape is, I think, appears to be very similar. like these services appear to be very competitive, very similar. I don't really see a distinguishing factor for Tesla. I used to think that maybe manufacturing, like when Elon says maybe manufacturing expertise will be the long-term competitive moat, but I'm not seeing any sort of manufacturing. Like it's not apparent right now that Tesla has any manufacturing expertise above and beyond what others can do. Say, a Toyota or BYD or um, Hyundai. Hyundai is now supplying Waymo. Waymo is expanding into Austin and other cities with Jaguar I-Pace, but they're working. I listened to the Google call, at least the CEO's comments at the beginning, and they said they're working on a sixth generation. I'll pin this quote at the top. They're working on a sixth generation driver that will significantly lower hardware cost. So, a bunch of people replied to this post at the top of their screens. We are developing sixth generation Waymo driver, which will significantly lower hardware costs. A bunch of people replied and said, are they removing LiDAR? But I don't think that's the idea here. I think seems to me that Waymo might be lowering, taking out one lidar or one radar here and there. I think with generation by generation they're going to continue to do that, but I don't think they're going to get rid of lidar altogether. And Elon has doubled down on we're not going to have lidar recently. So yeah, I don't know. Chris, go ahead.
So speaking to Tesla's competitive advantage in manufacturing, they're really still the only American car company that's scaled an EV line to the point of profitability. But it sounds like what you're suggesting
Well, that's
is
not true, right? BYD is also profitable.
the only American car company, like in the American market.
Well, GM says their EVs now have positive contribution margin.
Okay, but the other piece of that is like that also have like a full self-driving potential. Like basically what I'm saying is I think Tesla's going to be
GM has the same autonomous driving performance on the highway today as FSD13. The same.
Okay, on the highway.
Yeah.
But I was just going to loop it back to robotaxi. I think that Tesla's can be the only competitive robotaxi EV solution in America
I don't think
at
so.
some point in the future. But I think what you're suggesting is that we're going to get basically gas-powered EVs.
No, that's not what I'm saying. No.
Gas-powered
I think
robotaxis.
Waymo is going to be able to scale enough to cap Tesla robotaxi's profitability if Tesla ever brings a robotaxi service to the world.
Okay.
I don't think there's going to be any sort of economic profits here.
But Waymo's not going to be using EVs, and what you're suggesting is it doesn't make a difference.
Waymo is using EVs. What are you talking about?
Okay. So the Jaguars that are going around, those are pure EVs?
Yeah, Jaguar I-Paces are pure EVs. But that's not the point. Like Waymo, here's the Waymo value proposition is the following. They are the world's best, safest driver. Period. There's nothing better on the market. And there's no reason to think that Waymo cannot improve the safety and performance of its driver further. Waymo through Google has an order of magnitude more capital. Waymo through Google is vertically integrated into AI research, which the entire world is using Google's methods like transformers and other things that are coming out of Google DeepMind. Even Tesla is using Google's research. And then on top of that, Google designs its own TPUs and manufactures them through Broadcom. So Waymo through Google has more capital, has more deep insight into AI research, and also tightly integrated vertically integrated into TPUs.
Okay, where are they gonna get the
And on
hundreds of
top of that,
thousands of cars?
Waymo also has years of fleet management expertise, a partnership with Uber, and they're going to get to hundreds of thousands of cars. And first of all, I don't think they're going to need hundreds of thousands of cars. I think it's going to be more in the tens of thousands range. They're going to get it from any automaker that wants to work with them. And right now, they have multiple automakers producing cars for them, including Hyundai and I think it's XPeng that's doing the same, as well as other automakers. And there's going to be more. So I don't think vehicle production is going to be the limiting factor for Waymo. So, any other questions? I mean, where's I just don't see what Tesla's durable competitive advantage is. And don't tell me it is the pace of innovation, which has obviously stalled. And other automakers are out innovating Tesla at this point. Other players are out innovating Tesla. They're more focused and yeah, so I don't know. I don't know what the durable competitive advantage here is. And Tesla doesn't make any money today. Actually, if you consider, some sort of a reasonable compensation for the CEO, Tesla loses money. And it's going to lose a lot of money in Q1. Tesla could lose $1 billion or more in Q1, I think. Chris?
Yeah, I have to agree with you. I think the pace of innovation has slowed down at Tesla. I mean, I see Cybertruck is very similar to the Solar Roof, where it's an exciting project that tickled Elon's funny bone. It looks cool on the surface to some people, but
It's not.
ultimately,
It didn't tell his funny one. It's just that he had to bail out his investors in Solar City,
right.
and he clearly used Solar Roof as a reason to convince Tesla to buy Solar Roof. Tesla investors to buy Solar Roof. I mean, looking back, that's the obvious what happened.
So what? I mean, I think it was a mistake. They wasted a ton of money on it. And then, do you think Cybertruck is a similar mistake, where there's just going to be a niche product that's like barely even break even?
I mean, that's what it looks like right now. I mean, I don't know if it's even break even. According to Troy, okay, I think Troy is wrong, but he's been more right than wrong. So every time I disagree with Troy, Troy proves right. Troy says that it takes $100,000 to build a Cybertruck. Okay, it costs $100,000 to build a Cybertruck today, and I thought that that number would decline as Cybertruck production increases. Okay, but what Troy says is uh, production costs like COGS per unit only declines when Tesla introduces more stripped down versions of a vehicle. So, for example, it's not that Model 3 long range production cost declined. It's that Tesla introduced Model 3 mid range and then Model 3 standard range. And when you look at the Model 3 COGS per unit, it looks like it's declining, but only because the more stripped down versions, like smaller batteries, lower range, lower performance, etc. Troy says on a trim basis, COGS per unit barely declines, if ever. So that means for Cybertruck COGS per unit to decline, Tesla would have to introduce a kind of like the base model for Cybertruck. But Troy says they can't do that because they're losing so much money already with the 70, 80, 90, $100,000 versions. So how are they going to introduce the 39,900 that Elon announced, or the 59,900 versions in the future? Troy says that's not going to happen.
I think Tesla could have just made a more traditional looking truck that more people would have wanted to buy at a way lower cost. I think they totally blew an opportunity there, and then I think they blew a second opportunity not putting a steering wheel in the robotaxi. They could have made the $20,000 to $25,000 car, and they've announced that they're not doing that. They're not putting a steering wheel in that car. So I just can't believe it.
No, I think they will. I think eventually they're going to have to. I mean, I think we saw the cars that are kind of being tested on Giga Texas now have a steering wheel, the Cybercab or whatever. So I think they're going to have to come out with this vehicle. It's just that, even if they do, um, you know, that's going to be probably. I think the new Cybercab or whatever they're going to call it with the steering wheel, because it's not going to robotaxi. Um, the new Model 3, the more affordable model, it's going to be probably the lowest. Like, it's going to be the least profitable vehicle Tesla ever produced. You know, because it still has to have four wheels, a steering wheel, four seats, or like most of the car is the same. It's just a little smaller, so it's going to be a little bit lower cost to produce than Model 3 and the Model Y, but it's going to sell at a price that's like $10,000 cheaper than those vehicles, and it's going to eat into their sales as well. So I just don't see how this vehicle can produce or become a moneymaker for Tesla at all. So, I mean, I just don't see Tesla's financial situation improving in the near term here, and I don't know what's going to happen. But I'm shorting the company, so. And then, like, some bulls can't believe that these declining yields and interest rates will help Tesla, increase prices and everything. But that assumes the additional demand that's going to come into the automotive industry um, because of lower interest rates would go towards Tesla. And we're not seeing any evidence of that. The evidence shows the opposite. Tesla is losing market share at a very rapid pace in China, across Europe, and California, and many other left-leaning states in the US, which is where most of the EV sales are. So even if automotive industry does well, I think it's questionable that Tesla's sales will increase or profits or etc. will increase going forward. It doesn't have a leader. Tesla's leader is not there. He is at the White House. He's focused on other things. He might be spending only 1% of his time on Tesla right now, and he's not getting paid to do so. So you can't really blame the guy either. But he was on the call. So, Chris.
Yeah, the other thing I'd add for Tesla listeners is, when I was following the company 8 years ago, it was, JB Straubel, Elon, Drew Baglino, Andre Carpathy. Where are those guys now? Like, who's running Tesla? Like, who are the geniuses at Tesla? I don't even know.
Yeah, I don't know. Maybe they'll get. Yeah, I don't know. All right. So Chris messaged me yesterday and said we're going to AutoNation, CarMax, and Carvana in the subscribers on the space. If there are any other questions, please request to speak about Tesla, Nvidia, interest rates, macroeconomics, what have you. If not, we're going to switch to subscriber on the space in about 10 minutes. ACDC, how are you?
Great, Evan. How are you?
I'm good. What do you think about this idea that the yields are coming down 10 basis points today? Interest rates will probably decline for automotive and mortgages and everything. But I think it's kind of questionable if that increased interest in car buying will go towards Tesla, given that Tesla is losing so much market share in China, Europe, and California, and elsewhere. So people sometimes tell me, well, look at Tesla China sales are increasing. But that's only because EV market in China is rapidly growing. But that's about to be ended too. Like most of all the sales in China are already EVs. So there's a limit to how Tesla can benefit from this tailwind while also losing market share. So AC, how do you see this shaping up?
Yeah, I don't think the positive momentum necessarily will carry over into Tesla sales. I've always been in the thought that Tesla is like in a niche area, okay, and that's where it should have kind of remained. I never bought into the concept that EV adoption is going to go, mass nationwide and everybody will be riding EVs and stuff. I mean, I own one. I know the benefits of it, and I also know the disadvantages of it. So as a whole, when you look at the population, those people for the majority who wanted EVs have got EVs, and of course you're still going to have people coming into the market for them, but then there's a lot more competition. And alongside with that, I personally love what Elon is doing and his role in the government. He realizes that that is more important in terms of his life mission versus Tesla. But as an investor, yeah, that should be concerning because it's definitely bifurcating the market as it's bifurcating the nation. And the sales will definitely have an effect from that.
As somebody who neither has a long or a short position Tesla, would you recommend long-time Tesla investors to sell their positions?
I would say if you have a smaller position in terms of your entire portfolio net worth or whatever, and you believe fully into the robotaxi optimists and everything, then go ahead. You can be invested in that position on the long-term thesis. But if it's one of your larger positions or your only position, you have to take a very hard look at it and be realistic in your rationalization. Not listening to influencers, not listening to, long or short. Just do a hard look yourself and make a decision as to, are you ready for that risk? Because I think it is a risk and people just don't realize that.
Yeah, exactly. Okay. Yeah, I don't have anything else to say on Tesla. Tesla's now down 3.4%. And I think the stock is worth about $100 per share. And we're going to switch to, unless ACDC, you want to say anything on here? Otherwise, I'm going to switch to subscribers on space. I think 1 hour here, 1 hour there makes sense going forward.
I will just add my positive on FSD though. I had to attend a funeral, a wake actually, and I, was full bundled up. It's 20 degrees in Chicago, and it's really kind of hard, because I had a suit on and then I had an overcoat on top of it, and I hate steering with it always. And I put on FSD. It took me from door to door and back with zero intervention. So it's very impressive in what it's doing, and I haven't even got some of the latest updates. Not saying that it's robotaxi ready, but it's very impressive.
Okay, great. All right, thank you very much, everybody. Let me see if there's any questions on YouTube. All right, that's it. Thank you, and I'll see. Chris, are you coming to the subscriber on the space today?
Yeah. Yes,
Okay.
sir. I'll be there. I recommend other people join as well.
Thank you. All right, let's get started there. Take care, everybody.